The market is dropping significantly, while my portfolio remains stable and even starts to rise slightly. How, you might ask? Welcome back, happy investor. Since the summer of 2024, I have repeatedly pointed out, listen, American stocks, which I am predominantly invested in, or are becoming quite expensive. Several patterns, such as inflation remaining high, interest rates staying high to higher than expected, and the AI hype. Then only one more thing needs to happen, like a wild card such as Trump, who does all sorts of strange things. Perhaps not very strange from his perspective, but the complexity of his actions is difficult to comprehend. And yet, he has indeed introduced a special trump card, causing the market to clearly start turning. I might be a little early myself, switched from American to European stocks, but yes, better a bit early than too late. And in the end, I was right, and I hope that you, as a happy investor follower, could also benefit from this. Lately, I wasn't super enthusiastic about the entire stock market. The more expensive stocks become, the harder it is to find good opportunities. But now I'm happy again, and I'm always optimistic anyway. Only sometimes my videos might have come across as a bit negative or pessimistic, because I'm simply very cautious in what I try to communicate. After all, I can repeat and warn 1,000 times, and yet people sometimes do things without really thinking it through. That's the whole problem with creating content with influencers, which I now fall under myself and actually don't want to be associated with at all. But while influencers is just an umbrella term, and if you express things on YouTube like I do, or through my company Happy Investor, yes, it is what it is. So I genuinely try with 100% intention to say things that I think make sense. One thing helps, that is to zoom out and not be too preoccupied with daily matters. And also just look at the experiences, the lessons from the best investors and that kind of stuff. In this video, a new update of my portfolio. A lot has changed. And yes, I am happy. I have a lot of cash. That means I am going to benefit greatly from the current market decline. Only the market can continue to decline for quite a while, and no one knows how long that will last. I do not pretend in any way to have any predictive value. Even a chimpanzee can be right once every 10 years. So regarding my track record, this is the first time I have actually timed the market well, and timing is not the right word. I have simply reduced risks. I took a lot of profit from America and invested a significant portion in European stocks and a bit in China, with the ETF, which I have highlighted more often in our previous portfolio. In this video, besides the portfolio update, also an important change of investment platform. This does have a significant impact. And here you see that I do have a bit of luck. Because in transferring a portion of money to the other portfolio, I sold extra shares because I want to transfer them to the other investment platform. And yes, as a result, I happened to miss that minus 10% in growth stocks last week. So this fortunate action, sheer luck, 100% luck, it did save me a lot of money. Prevented a loss of about 12,000 euros. But well, it remains to be seen. The market might just bounce back and everything might return. Who can say? However, I personally think it will take a while because many factors still need to be absorbed into the economy, and no one knows exactly what those rate hikes will have in terms of impact. So first is the portfolio update. The second is an update on the investment platform. And the third is about how I think I can position myself to benefit from the upcoming market declines. Again, pure 100% disclaimer. I am not a personal advisor. Yes, that's it. You must always think very carefully about what you do. Please be critical. I repeat this very often. Need to keep repeating it. Please think for yourself. And what I do probably doesn't fit 100% notes for you. And besides, I don't want to say that they are good actions. I have made countless losses. I learned from my mistakes, still continue to make mistakes. That's the game. You have to keep learning from it. Learn to take lessons. Otherwise, you shouldn't invest. I think that's also an important message. Now the stock market is starting to decline. 10, 15% of ETFs, depending on which ones you have. And if this somehow worries you, then you should actually immediately reduce your risk. Or you should stop checking your investment app every day. I myself removed my investment app from my phone a year ago because I was also bothered by it. then you end up checking it too much daily. And then you start worrying about things that aren't relevant. Moreover, life is about living, not about investing, not about money. It's just a means to an end. We are trying to become financially free. And if we achieve a nice return, that's a bonus. And that will definitely happen. You just need to zoom out and think long term. That means investing in high quality companies or simply investing in simple ETFs, low cost, and consistently buying more. Now let's look at the portfolio update. Hopefully you find it useful. Then about an investment platform. Perhaps we should start with that first, by the way. And for example, how can we possibly benefit from this huge market crash? And personally, I see a very nice opportunity emerging. We just need to have some patience. That's why we will continue to share analyses of potential winners for the coming years, especially for the long term. So be sure to keep following us, or don't follow us when you certainly won't regret it. Thank you for that. And now let's get started. We will soon discuss a portfolio review with significant changes in positions and ETFs. But first, before we do that, something else, a news update. For many years, I've been investing through DEGIRO, and as you know, it's a great platform for beginner investors. However, I noticed that because DEGIRO was taken over by Flatex over time, it became DEGIRO Zero, and then it became again DEGIRO Normal. However, they have continuously increased the conversion costs, I believe, to 0.25%, and now I notice that my portfolio has grown significantly. That this is becoming quite an expensive issue for me because I buy a lot in dollars, in stocks, not so much consciously, preferably in euros, but also simply a large part in dollars, simply because they are not available in dollars through DEGIRO. Well, you can see here that my balance is on 20,000. The last portfolio update was still around 210,000. Then it dropped a bit due to, of course, the market declines after about 190,000. But you only see a balance of 120,000 here. Moreover, it's only 80,000, or 1,000 currently invested and 40% free capital. What happened? Well, simply sold a part and transferred it to MEXEM. So actually transferred since yesterday and today, and now there's about 93,000 here. I actually had the MEXEM account since 2021. I once sold a fund back then, which I will soon discuss in the review. I actually didn't do much with it. Moreover, it was a super bad entry point, but due to the high dividend, the losses were actually limited. More on that later. How did I end up with MEXEM? First of all, my experiences with Interactive Brokers. I'm currently logged into Interactive Brokers. However, I have also transferred this to MEXEM. MEXEM is a Dutch company, and the investment platform works exactly the same as Interactive Brokers, but with good Dutch customer service and all the functionalities that Interactive Brokers has to offer, which is much more than DEGIRO. DEGIRO is still a very good platform for beginner investors, but MEXEM is simply better in several areas. And I'm already considering switching over due to certain conversion costs. Then 2 weeks ago, MEXEM got in touch with us. Hey, nice videos, I hear. This, that, happy, establish collaboration. Well, fine. First of all, before I continue, all brokers offer compensations. DEGIRO offers a compensation if we provide clicks and people do or do not create an account. MEXEM offers that compensation. eToro offers that compensation and more. Only MEXEM and DEGIRO are relatively inexpensive investment platforms, and in my opinion, the best choice for the Netherlands and Belgium, for example. However, both offer a relatively low commission for when you refer people who create an account. Why low? For example, eToro offers a compensation that is 5 to 6 times higher. How is that possible? You might wonder. Well, simply by thinking logically, how can someone offer higher compensation if they simply make more profit? We consciously do not promote or rarely promote, but if we do, then we do it for DEGIRO and MEXEM in this case. Why? Because they are simply the cheapest and best option and will save you money and a lot of transaction costs. Why have I partially switched to MEXEM? That is not purely because people want to collaborate with me. No, I am already considering it because of the functionalities, but also because they are simply cheaper than DEGIRO or Skyexinta in terms of transaction costs on dollars. This is very important. Do you have a DEGIRO account and you mainly invest in, for example, euro currency? Fine, just stay. Also in ETFs, where they will soon provide an update, a uranium ETF that I recently bought is not going to perform very well. So more on that in a moment. But if you just buy in euros, DEGIRO is relatively cheap. And the next, I also have a lot of shares in dollars. Here we see, for example, Apple Loving. Well, Apple Loving is not listed on the European Stock Exchange. You can only buy it on the Nasdaq in dollars. Achieved a nice return, as you can see. And I sold a lot, as I mentioned in the introduction. I sold many American stocks in anticipation of what is going to happen. And the last sale you see from the past year is only since 2025. Here I sold a very large position of Uploving at a price of 460. And that last sale here from 2025 is purely because I'm transferring this to MEXEM. So I sold a number of USA stocks. But what I want to show are the transaction costs. Here we see the transaction cost. The fees are only €2. Okay, very good. But we see auto FXV, which means conversion costs. These are 0.25%. So for this sale, because it's quite a large amount, I pay an extra €50 simply in conversion costs. This conversion cost, if I were to do this at MEXEM, is significant. Lower. The transaction cost would amount to €1, and the conversion costs to a few euros, but much lower. And you can imagine if your portfolio keeps growing in the long term, which of course is the intention, and you start buying a lot in euros, in dollars, then those transaction costs will only increase. So for me, this is just a powerful reason to switch. Decision made, no looking back. It also turned out well because I did this last week. And since then, the stocks have dropped significantly. So it's only good for me. What we see here is now the MEXEM account. Business portfolio. I have transferred it from Interactive Brokers to MEXEM. And this looks different from the MEXEM portal. What is the difference? Well, nothing, and it just looks different. Here we see a cash position or a total position of 122,000. This is my business capital that falls under my holding. And then we have MEXEM Private, since I bought 90,000 on this. So my total private capital is now around 210. If I say it correctly, a little more than 210,000. I said my portfolio had dropped from 210,000 to 190,000. I still have 20,000 euros that I had in the bank because I saved that over the past years. I was still able to add that. And I am going to fully prepare for the market declines that are coming. So in a nutshell, what do you get out of all this? You might consider creating a MEXEM account as well, but you have to decide that for yourself. I don't give advice on that. You have to know it purely for yourself. But if you want to, from Happy, we always try to create added value. In our video descriptions, you will find a link to MEXEM, the cheapest broker for USA, stocks and ETFs. And if you click on that link, you will end up on a cashback landing page. We have arranged a €100 cashback for all our Happy customers and all our people who follow Happy Investors. If you decide to create an account, you don't necessarily have to start right away. But if you do, you create an account, then you will at least already receive that €100 discount on transaction fees. Keep in mind that if you switch precisely from one to another, that it incurs costs. So this is purely to compensate if you make a limited switch. But I would personally advise not to jump in too much all at once. Be careful, think carefully about what you do. In principle, you should sell as little as possible, of course. And speaking of that, we have arranged a masterclass with Rowan Nijbog. Rowan, if you are watching this, thank you very much for your efforts on information I have provided for the long term. Investors in stocks. And everyone can re-watch this masterclass on our YouTube channel, Investing in Stocks Like a Pro, also from Rowan's book. Well, Rowan is one of the few people I would want to recommend, if that's the right word, for people who really understand a bit about investing, especially according to the principles of Warren Buffett. That about MEXEM, about the DEGIRO. That's why my portfolio reviews will look different. Because yes, part is MEXEM, part is the DEGIRO. It gets a bit complex here and there, but we'll surely figure it out. Let's now look at the developments of my portfolio over the recent period. Let's talk about the portfolio development of everything that has happened recently. So since the summer of 2024, I indicate, listen up, guys and ladies. It might be that the stock market is quite overvalued. Also with the AI hype, and also the inflation that remains high and the interest rates that stay higher than expected. Actually, you simply look at the stock market around you, and then you hear a lot of people saying, well, it's all getting very expensive. Now Trump comes into play, and he has introduced various tariff increases, which will likely mean for American citizens, at least in the short term, that everything becomes more expensive for them. What happens when everything becomes more expensive? And the interest rates remain relatively attractively high. Simply put, people will spend less and save more. Interest rates, and especially higher interest rates, act like gravity on stocks. As a result, the future may look less promising in the short term. Perfect market timing never works. I'm going to show you in a moment that even after the significant drop, I bought some stocks, small positions, but because you never know exactly when the market will rebound, and they are still down by 5 or 10%. No idea. Perfect timing never exists. I actually sold a bit too early for some stocks myself, some stocks too late, still making mistakes. So again, no predictive value. I don't have a crystal ball. Only a chart that I have often shown is the multiple, the price to earnings of the S&P 500. And here you simply have to think logically. If prices are high, then that is always the case. Just like with poker, your chances of higher successes become smaller. So you need to be more cautious with your cash. That's why I've built up a lot of cash recently. And currently, my ratio between cash and stocks, I believe, is about 30-70% or 40-60. That means I am in a very good position. If the market starts to decline, what good is it if you are still fully invested now? Yeah, sorry, not very much. But you can keep following me. If interesting stocks or ETFs come up, and I think they are interesting, I will definitely share every time that we buy them. So if I buy something during the week, I will try to make a video about it right away. No advice. I'm not saying they are great investments, but at least it's inspiration for further research. And hopefully, of course, I'm right for myself, but we'll see about that. I've explained how this works before. I'm not going to repeat it now. But it comes down to when you look at the Shiller PE ratio, it takes inflation into account. It is very high, and we see this happening more often. There is much to be said that the price-earnings multiple is now higher due to great companies like Amazon, Nvidia, and all those also in the S&P 500. But this means two things: concentration risk and the fact that people get used to that higher multiple, which can sometimes turn out negatively. Well, all of that happens, but there had to be a trigger, of course. And in this case, that is Trump. No one knows how far it will drop, only it doesn't look very artistic, and the market can be irrational for a long time. In the past period, it was irrationally high. It could also be that in the coming months or even years, it remains irrationally low if pessimism really hits. But yes, time will tell. A lot of investors from the past 5 years have only experienced one short crash, the corona crisis, and that was also quickly recovered. But there's something else, and that's the whole crypto bubble. Do I have something against crypto? Absolutely not. I'll show you. And I actually haven't shown this before. Also because it takes me a lot of effort to log back into these crypto platforms. Yes, which I all created in 2017. You can see that here on the screen. This is Kraken. I created with Fava a little later. Coinbase? Yes, I have all sorts of things like this. Need to verify address again. Binance. I can't even do anything on Binance anymore, because then I have to verify again. Super annoying, all of it. I also had some crypto on Cryptopia or something like that. Coins, altcoins as they call them. And that exchange is just completely gone, like many other exchanges. And you see here 2017. I remember it well. It was the summer. I bought a lot of Ethereum via Coinbase, but I can't show that as evidence right now. I will do that in the next videos. And I had read about Bitcoin. Super interesting. And the second article I read was about blockchain technology. Absolutely great. Super interesting. And then I read that Ethereum is a kind of infrastructure where things run on regarding blockchain technology. Well, that's super nice. So I thought I'm going to invest in Ethereum. And at some point, I also invested in Ripple. And you actually see here, I had a small position of about 400 euros. And that was actually in a very short time. It had risen to about 7,500. And this is only my Kraken platform. So on Coinbase, I had Ethereum. I also had Verge. It had gone up 50 times in 2 weeks. But this was my first experience with a profit. So I started investing when I was 23. That is more than 10 years ago. Well, this is 2017, so a little less long ago. And this was the first real hype I experienced as a novice investor. And I also experienced this significant drop. And I'm no different from others. Novice investors. Even during this hype, I thought, wow, this is going to the moon. I made calculations. Wow, if this continues for another 2 weeks, I'll be a millionaire in a few months. I know the feeling. I know the pitfalls. And that's just the process you have to learn from. Really fun. But because the drop was so extreme back then, the reality of experience also hit me. That then comes back and why it can be when the markets are high. And I don't speak positively about it, then it's not negative or pessimistic. But that's just reality. Experience. When hypes increase and people start telling you which cryptocurrencies you should invest in, then it's time to be cautious. These are often the people who are just starting out, who think they know the truth. Do not take the risks into account. Do they know all those lessons from the past? No, not at all. That's perfectly fine. But no hard that when such trends occur. And you hear all sorts of stories at parties about, for example, Nvidia, a great stock, whatever it is. It's a great company, but when these kinds of stories arise and hit the media, then that is a sign that you need to be cautious with your money and will probably want to sell positions. So that's really nice. I placed all those orders back then after that crash, and they only manifested or came through many years later. So these are all small sales that happened automatically, in this case of Apple, as you can see here, XR. I also bought various altcoins, IOTA, that Centraland, really nice, but also, for example, Walton. I still see that here. That lists it. I remember that period very well. They create white papers then, and then they have a wonderful story, and I fell for it too, especially because I am optimistic, and I am action-oriented, and I believe in growth potential. You just get screwed. That's what it comes down to. You are being cheated, and it will only cost you money. Costs, all these altcoins, most of them have become worthless, I believe. The only real ones are, for example, Bitcoin and Ethereum. Ripple has done well, though, so I achieved high returns considering the amounts I invested. Just know that a lot is bullshit, and you need to distinguish that bullshit from what is truly good. Well, all these lessons learned also in combination with the stocks where I was already slightly involved for about 2 years or so led me to fully 100% focus on investing in companies, in stocks. You can research company stocks very well. And a crucial difference with altcoins and, for example, an Ethereum or Bitcoin is that companies make profits. And if companies make more profit in the future, it means that the price earnings ratio becomes more attractive. As a result, though, demand will increase. With crypto and Bitcoin, there is only supply and demand. That's what they call speculation. And if suddenly demand disappears, then you only have supply left. And then the price will plummet hard. And there is no fundamental development behind it that ensures Bitcoin truly becomes more valuable, except for people's perception and belief in it. And that belief is incredibly strong. And I think Bitcoin can certainly mean something for the coming years. Only it's a crucial difference from companies that make a profit. So if you don't want to speculate that far, but you really want to be calculating, invest and can calculate, hey, this is what a company is worth now. And over the next 5 years, it will likely grow because they do this, 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 this. So it will make more profit. So this will be a good investment. In other words, you calculate what the intrinsic value is based on the cash flow they will generate in the future. And if you can pay a good current price today, especially if it's a cheap price and the company only becomes more valuable, then you have a mega jackpot. In the notes on, so a crucial difference in investing. Does it always go well? No, because you have the market, which is volatile. You have limited time. You make mistakes, those kinds of things. For example, evolution. I am very positive about it, and yet my position, which is one of my largest positions, is down 20%. Did I really misjudge it? I don't think so. I think that's what I've often said about evolution. A great business model. It's in a sector that might be a bit questionable because they offer solutions for online gambling. It basically comes down to that. But then online entertainment, yes, it's just gambling. Great business model, highly profitable, will probably just grow in the future because they have just started. Also in America, there is significant uncertainty due to market regulation. And it started with a bit of uncertainty, then some strikes, then the uncertainty of legislation and regulation. And now the market is continuing to decline. So the overall market is declining. And when the overall market declines, then usually all stocks decline. It's that simple. Not 100%, but most stocks then decline further. So for evolution, that simply means, yes, bad news on bad news on bad news, and that continues to persist. I'm not worried. I can basically invest another €5,000 once more. Yes. And then my total value of evolution. would it be 35,000 euros? That is 10% of my total portfolio, taking into account both my business and private portfolio with MEXEM. Another example that has been doing well recently, which I also made a specific video about, is Technion. Bought a lot more of Technion recently, and this position is now it continues to rise and has risen to 16,000. The moment I made that video was 2 months ago. Since then, the price has also increased by about 10%. So it's doing very well. And you can see some other serial acquirers in my portfolio that have relatively smaller amounts. In a moment, I'll show what the recent transactions are. Zeta Holdings. We'll talk about ETFs in a moment, but Zeta Holdings is really doing very poorly. I'd bought a little more, and there you have it. Market timing doesn't exist either. But here, I think the mindset is also very important. Zeta is definitely going to grow over the coming years. I just need more shares. It's as simple as that. And the higher price tag was somewhat on the high side, but not too high as far as I'm concerned. Only when the market falls, and certainly risky stocks fall even harder than usual. Then you see that, for example, such as Zeta also drops significantly because of that. So it's at about minus 40%. I haven't incurred a loss yet, but my total loss stands at minus 5,000 euros. So that's just bad. I can't make it any simpler than that. I bought a lot of USA stocks, but I still kept one. AppLovin, maybe it's for my own ego, but mainly to remind myself that big gains can more than make up for all the losses. I personally think Evolution is very interesting at this price level. Only I can't buy much more myself, because I won't invest more than 10% in one company. That's simply my rule of thumb. Alright, let's quickly take a look at the recent transactions. Well, you see a lot of sells, but that has to do with my transition from USA. Stocks, which I am transferring to MEXEM. Well, not much is happening on that account yet, and soon an update on the business investment portfolio. But I do have a number of stocks since March. This is an update from last month. Bought and then sold. I slightly reduced my position in Teleperformance. That was a good move, because that 95 euros is now a bit lower. So I simply reduced some risk, while at one point, because I had bought more of the structure, it had risen to 10,000. I sold 4,000, so that my position was reduced again in percentage. Yes, I'm happy with that. I also bought some shares, after a significant drop, in Powell Industries. My initial position is about minus 30% due to the additional buying, so buying more every time it drops significantly is usually good if you're investing for the long term, and you've done good research on companies that will grow in the long term. Well, Powell Industries was bought. Chazal, a first small position was taken. I'll tell you more about that later. Incidentally, it has recently dropped a lot. By the way, also because of the entire market. Landing Club bought a little more. I had already taken a very small position there. These are all very small positions that I had bought more of. And I had bought a little more of Hims and Hertz. Also, Zeta, as mentioned. Regarding ETFs. I have taken a first position again in uranium, miners ETF. I sold that in 2024 because, well, I should say volatility increased a lot in a short time, sold. And now I have again bought some at 7.5, but this ETF is performing terribly. But that's the risk. In total, it's a small percentage of my portfolio. I think uranium is a long-term theme ETF that is relevant, often mentioned in other videos. We will also discuss that. Here you also see a split adjustment of Chazal, but that's beside the point. Then a lot of selling. Really a lot selling. The stocks that I have held at a loss for a long time are StoneCo and PagSeguro. I also bought a lot more of those because they had dropped significantly. And now they are starting to rise significantly again. I only bought them purely because they are in dollars. I am going to transfer that to MEXEM. And actually, this whole transition has worked out very well for all stocks, except for StoneCo and PagSeguro. However, I coincidentally also have those in my business portfolio. So I already had quite a large position from the two portfolios. So yes, it is what it is. And I am still benefiting from the recent price increases of both StoneCo and PagSeguro. I am not going to buy additional shares of all stocks. And I need to think very carefully about that, which ones I will buy more of. But for example, Shopify, yes, it has now dropped significantly. And I have already taken profits from Shopify before at the end of 2024. to do so. And yes, it has now dropped a lot again. And I am definitely going to buy more Shopify. I am also going to buy more of the China Internet ETF, but this is purely a transition from dollars to euros. So in the short term, it's a bit painful in terms of transaction costs, but I am an entrepreneur. Maxim wanted to collaborate with me, so we reached a good agreement that I am compensated for my transaction costs incurred at DEGIRO and Maxim. Yes, not everyone is in that position. That's why I say don't just blindly sell everything. If there is no reason to do so, be careful with that and also try to limit the costs. All right, so a small update on the recent months, and we see here very recently on April 3rd, a new purchase of SDIP Technion. This is a small serial acquirer. I only bought a little bit of value, as you can see. So this is a very small amount, and SDIPTAC has declined somewhat since my first position and is now at about minus 15%. Talk to me about the long term. No worries about that. And these are just small positions that I take. That's my strategy. I invest in relatively risky growth companies, but that in the long term, hopefully can outperform due to the profitability they achieve, and more specifically expressed, the return on equity and the return on invested capital. If that is consistently high, for example, consistently above 15%, then that will also be the result of your investments in the very long term. Roughly speaking, the reasoning of Charlie Munger. So, that's regarding the DEGIRO. Well, I can imagine you still want more updates, only I've been talking for a long time. So, keep subscribing. Then you'll keep following us, and then I will continue to share what I think is relevant. But you see at least a huge cash position emerging. 40K here. In my business portfolio, I've also indicated a lot. I repeat that I still keep a lot of cash on hand. And your business portfolio was established in, I believe, also around mid-2024. By the way, it's not doing very well, you know. So, yes, since that moment up until now, the market has also declined. So that's logical. So there is no outperformance here, as you can see. But you still see that 53% of this portfolio is in cash, namely 65,000. Also in Max and Private, a lot of cash. So I am very curious how strongly I will benefit from this profit. I consider myself financially free. I am now trying with content through YouTube to also help you achieve financial freedom, although that is always a long-term game. And I hope that together we can benefit even more in the coming period. But well, no guarantees, unfortunately, and certainly not based on the past regarding the holdings. Within this portfolio, it has significantly decreased over the past month, I must say. First of all, I have a portion in real estate stocks. Real estate funds, I should say. Right, better known. And they have decreased by about minus 6%. Not very good. And my shipping stocks, which I do believe in for the long term, and they all pay high dividends. I still believe in them, only they have also significantly decreased. Yes, they are, of course, super risky. Oh yes, I can better say volatile. And a few stocks have only increased, but there aren't many. We see Pax Seguros Toneco and BBK. Also, a serial acquirer has increased in the past month, but mostly just roughly declined quite hard. Good life brands, super interesting. As soon as it reaches a certain level, I have set a trigger, I will get an alert and I will buy more. The position is only $600, so if I then buy more for another $600, it immediately has a big effect on your average purchase price. Very long term. Game. Very small company in fitness supplements. Very interesting. CEO, background in private equity. Exactly what I'm looking for, long term. Serial acquirers with financial discipline on their debts and continuously generating higher return on equity. That's the game I like to play in. I also had some riskier ones, or I should say more speculative investments, for example, in Canadian solar. Well, another lesson learned. Do not invest in markets with very poor prospects in the short and medium term. You might believe in it in the long term. Only if the market trend is continuously declining, it's better to stay away. So this stock is not doing well, but bought more. Recently, GCT, GigaCloud Technion is a small company. You see a very small position, but of unprecedented. 5%. Heavily affected by Trump's tariffs, because what they do is essentially set up distribution centers in Europe and America. And they buy goods from China, including their own goods that they have manufactured, and they distribute them to sellers who can sell them in a sort of drop shipping-like model. Very interesting company. Search potential, a Chinese management. Yes, I think it does have a chance of success, but there is a lot of uncertainty about it. But more importantly, the price is super cheap. So I think there is a margin of safety, and I'm not worried about what will happen in the short term. Finally, the last one, KPG, bought more. Serial acquirer in Australia, in accountancy firms. And super interesting. So I just keep buying relatively smaller accountancy firms. As you know, accountancy is just very good business. I don't think chatbots and such are really going to transform it radically. Entrepreneurs, people, we all still need a bit of accountancy. Prefer to outsource. Too difficult to think about. So it just remains a good business. That business always has high recurring revenue. That means the revenue they make tomorrow or make today will likely come back tomorrow. Those are just super good earning models. And Tally Partners Group is led by a team of accountants. The CEO is someone who likes to be in the spotlight. That's how it seems. Has also written a number of books. I'm not very impressed by it, but yes, I think it has a chance of success. The market value is still around 10,000. It has dropped a lot in the recent period, and I bought more at 10.8, around 10.8. And I have set up an automatic purchase transaction with a price limit of 8. I hope it doesn't drop that far. If it does drop that far, then you automatically buy more. I'm still at a profit of about 1,000. That's 10%. I hope this one will rise. But the lessons I actually want to share with you are if you're really playing for the long term, then you must first believe in the company. I find serial acquire super interesting. I'm going to do that myself as well. I'm going to establish a holding company. I've been saying that for about a year. Those small steps have been taken. It needs time. I'm doing it. It also aligns more with my strengths, entrepreneurship, more action oriented, creating operational value, but you can also outsource, in this case, in shares. And Credit Partners Group is a relatively small company with a market value of about 450 million now. I don't know exactly how much because they have dropped a bit. Let's say 500 million. And 500 million to 5 billion in price value means times 10. So your investment multiplies by 10. If it ever goes to 50 billion, you have times 100. Technion is also very small in market value. It has a market value of about 300 billion or million, maybe even a little less. Technion, I currently have a position of 15,000. Let's round everything off. If Technion goes to 2.5 billion, 15,000 becomes 150,000 euros. If it goes from 2.5 billion to 25 billion, which is very large, that 15,000 euros is no longer 150,000, but 1.5 million. That could happen with just one share. Technion is super interesting. Management is super honest. Young, but that doesn't matter. Make mistakes so you can learn from them. We are in it for the long term. So stick to Warren Buffett's principles. I could keep talking like this. Super interesting. Watch another video about it. Technion, it's called something with financial freedom. Best earning model. Watch it again. Super interesting, I think. And the essence is actually what I want to say. Invest relatively smaller amounts in it. I invest, as you can see, relatively larger amounts in it, but it starts with relatively smaller amounts because a small amount can grow into a very large amount. And if you're wrong, and I am often wrong myself too, then the small amount will drop to 0. Then you only have a small loss, but the upside potential is enormous. 14, maybe even more. So let the compounding effect work for you. Think in probabilities, or in other words, probability calculations, and invest smaller amounts in risky growth companies. That is my strategy. Or to invest in a select portfolio. For example, 10 to 15 stocks. If you are more experienced in high quality companies, then you should think of an Amazon, for example, or a Google. I also think Shopify might fall under this, maybe a bit volatile, but companies with a strong moat. And then you want to do more research on all those companies and invest larger percentages per company. Step 3 is just invest very much, simply in ETFs. That is obvious for most people. I would assure you, I have guided more than thousands of people with Happy Invesco also through our community. 90 or maybe even 95% of people should just comfortably buy ETFs. Good hope. Simple. Passive, just keep buying in every time. For example, when the S&P 500 or the Invesco QQQ, the Nasdaq, drops by about 10%, if it drops by 50%, buy more. If it drops by 20%, buy more. If it drops by 50%, buy a lot more. And you shouldn't do more than that. You can enjoy life. You don't need to be busy with stocks. You just need to log in once a month and buy a little more. And that's it. So that's with stocks. It's another way, yes, theme ETFs, but that doesn't always turn out well. As you can see here, bought back my position in uranium, miners ETFs, a theme ETF super volatile. There had already been a significant drop, but apparently now it has dropped even more, with about minus 16%. So theme ETFs, you should only do it if you enjoy being involved with it. And the same applies here. High risk profile means that you can relatively better invest smaller amounts. Take, for example, a global ETF. In principle, you can invest 100% of your money in one global ETF. Just keep in mind that besides stocks, you also have options like real estate funds, bonds, commodities like gold, which is currently performing well temporarily, although I think that now is not really the time to buy gold, but rather to take profits, because you should always take profits before the crowd exits again. But more on that in other videos. Hey, thanks for watching. I hope it has been useful for you. I can imagine. Many questions? Just let me know. I would greatly appreciate it if you follow. I will try to give as many tips as possible, especially what I am doing myself, which stocks I buy and maybe sell. Also for ETFs. So I am waiting for another new purchase for China. I have indicated before several times that I especially hope that the Invesco QQQ, in other words, the Nasdaq, that this ETF will drop significantly. Because if that happens, I will put a large portion of myself into it. And then I will also continue to focus on my name, serial acquirers, and a number of other types of companies that I think have nice growth potential, like Evolution and also Zeta. There are winners and losers. At this moment, I can only show you that Evolution and Zeta are significant losers. So who am I to follow? But that's up to you. Thank you for watching. See you next time.